Shane from Global Market Trader. Hope you're having a great day. Thought I would take you through one of the tradable sessions in the US for crude oil. So there are three different trading sessions that you could trade on using the Renko. It's 9:30 to 10:30. You'll see from the walkthrough presentation that it had a very good night last night, plus 32. Now, if you traded the whole session, it would have been a lot more, but really just looking for two winners and done. And hope you enjoy the walkthrough video. Cheers. As I mentioned there, we had a T3 sell short at 81.55. So our stop on that trade was always going to be one full brick. Now these bricks are a 4 cent brick, so it'll be at 79. So our stop is at 79. So basically 24 cents there. So we had 24 cents of risk. Now, because we've got a T3 sell, if we break if we break above this area here, anytime we've got the market's overbought or oversold and we've got this fatigue index sets up a trade, if it's a sell setup, then wherever our stop is, we can take a breakout buy trade. So this is a T3 sell. Now if this trade fails, we're looking for the breakout buy, but that can only be done if we don't move 10 points. If we move 10 points, then obviously that's off the table. But and this is what we call, this particular breakout trade's called a reversal breakout. So the reversal breakouts are very good. We're going for 20 cents there. So you can trail it, but I've found that the most profitable way to trade it is just to take the 20 cents off the table. And so that means that our initial trade stopped out for negative 24. Our second trade gets plus 20 cents because that easily pushes up and goes much further than that. It actually gets taken out at 99. So that's our second trade. Now there's no setup here. You can see that that's just a standard cross trade. We don't take those, just a simple cross. There's no divergence, no double top, so no trade there. And you can see here that there's no setup here. We've got no divergence. We've got a double bottom, that's it. But then we get up here and we can see we've clearly got divergence up the top. We've got a nice double top and we've got a potential sell setup. So that's really a T2 sell. As soon as we see divergence, that's our primary indicator for the potential trade. There's divergence, price is making a higher high, and you can see there that the MACD is making lower highs. So that's a sell setup there, and the trade sets up at 82.15. So our stop's always the previous swing high. So we'll just get rid of that there, previous swing high. So it would be sitting up there at 39 because we've got to move it to we've got to have our stop at least one brick above the previous swing high. So our stop's at 39. We're getting in at 15. So again, we've got 24 cents in the trade. So our risk is 24. Now we're going for a trailing stop here. So our target isn't fixed. We're going to get taken out. Now the first price pushes down here. It goes to past the 14-point profit, retraces back, but there's no trade here, so no divergence, no setup, and our trailing stop is at 82.07. That doesn't get hit, so then we push lower and we finally get taken out on this trade there at 81.79. So we effectively collect 35 cents off that, 36 cents minus the 4 over here, so around about plus 32 for the session. So that would be two winners and done. So using the power of quitting, and it's 2 wins, so 2 wins and positive. And that's it. So if you wanted to continue on, there wasn't really, there was a trade, there was a buy set up or a potential re-entry short that didn't really, that was a loser there, that re-entry short, but then you got a nice winning long and then a winning short, and now another winning long. So we've had a couple of good trades. So this re-entry short would have been, there it is there. There's your re-entry short. That doesn't go really anywhere. Then we trigger into a long that is a winning trade or a profitable trade, and just slightly profitable. And then the short delivers in at 79, out there at 79, out at 55. And then we've got another long set up there that actually goes not quite 20 cents, but it pushes up strongly there as well. Oh, it does, sorry, go 20 cents. So traders, that's our crude session, and as I mentioned before, the 10:30 to 11:30, as you said, Bob, is probably the best time to be trading it. So that's a quick recap of crude. I'll mark these other trades up, but basically happy to mark up the session just to show you what all the trades set up and how they went. But that's it. That's